Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Tuesday, March the 30th. Pay attention to that date, March the 30th, 2010. What I'm about to show you, you probably haven't heard before. At least parts of it you haven't. And if you're long this market, it may make you wet yourself, so pay attention. In 1929, we had a stock market crash. We all know that story. What happened in 1930? Oh, that's another story altogether, isn't it? See, in 1930, the stock market, the early part of 1930, stock market rallied. Yeah, rallied so good, people probably thought they had themselves a V-shaped recovery. How long did it rally? Well, it rallied all the way into April, before it peaked. 30% away from the previous high of 1929. Interesting, isn't it? What was the date I just said it was? Oh, March 30th. 2 days away from April. We're seeing peaking signals in the market. And did you know we are 30% away from the previous high of 2008? Did you know in 1930 people said they had a recession on their hands? You know, look around the market, they'll tell you we got a recession on our hands. In 1930 they also said the worst was behind them. I've heard that here too. I think it's time we sit down and consider the realities of it. In 1929 we had ourselves a credit bubble. It was focused in stocks. You could go to a bank and give them $1, they'd give you 10, and you could go out and buy stock. 10 to 1 ratio, that's pretty awesome, right? Kind of insane in hindsight, and we all laugh about it today. We wouldn't possibly do that, or would we? How much you got to put down on a home to go buy a house? 10%, wasn't it? 10% down, you get the house. That sounds familiar. Oh, that's right. It's the same credit bubble we've been talking about, only the asset class has changed. It's not stocks, it's real estate. Same problem, just a different wrapper. We already know the housing is preparing for a double dip. Do you really think the stock market's going to keep going higher? It's not. In fact, you're going to peak. Whether or not we have a double dip isn't the question. Whether or not the double dip is the worst of it, that's the question. I'm not playing around here, guys. It's time to be asking yourself one question. If there was a double dip, would you be okay? Plain and simple. Analyze the worst case scenario and check your portfolio against that. Now, I can't tell you what to do. You do whatever you want. But if you want to know what's in my portfolio and what I'm doing, sign up on our website, pay $145 for the whole year, and boom, you're in. That's simple. God bless, take care, and we're going to make some money here. The sad thing is, we're basically taking someone else's money who doesn't know this stuff. Refer a friend, continue to use our free services, and by all means, pass this video on to your friends. We are 30% from our previous peak. It's almost April. We've got too many strong correlations here, guys. Those who don't know history are doomed to repeat it. I've just told you history.